Hello and welcome, as it is the completion of the 29th day of May 2021. My name is Derek and this is the Money Charts channel where, like always, all bets, trades, and amongst the like, that'll be each his own risk to their own reward. Starting off within Bitcoin against gold. And the price is 18 and a quarter, which means you're going to need about 18 and a quarter ounces of gold to buy an ounce of Bitcoin, or you could sell that much to get as much gold, how you want to look at it. And the price action, of course, in this amazing uprun, at least amazing for the Bitcoin point of view, and then consolidating with not even close to sideways, within this sideways range in here. Of course, we can see breaking down and consolidating amongst this level. If this level breaks down and we go down further, I think we're going to go down to about here because I've already calculated some key Fibonacci amongst it. The key low is $2.55 and the high, or cents, ounces of gold. And 37.1 ounces of gold was the high. So the move from the last key low was a differential of about a 15x move, yada yada. So key levels, 1972 was a 23.6% down move, then 13 and a third, and then 7. As the key points. And that level that I talk about, that 500 or 2, it's this level here, double hit bottom, once from this level here and then the retest here. So from this low to that high, that's where the key fib comes from. And you can make a case, maybe I'll do a low from the breakout points. It's in this case, I would prefer the low. I can remember back in 2017 when we think this was going back up to the par level. It's like, oh my goodness, gold and Bitcoin worth the same price as back in here. I mean, it just says 0.00 and then 0.01, 0.02, 0.04, all the way up to 0.075 or so. Come trace down to a fifth, which means at that point you would have needed 5 Bitcoin to buy an ounce of gold. And this is going to be an interesting chart as we move forward, because there's going to be a time where I think gold is going to be very fantastic. But before we show the gold and silver charts, let's show Bitcoin against the US dollar. And it's currently in at 33,100 as it fell down last from the 18 average on the 12th of May. The support level range, you had some support here at so many different spots, but the key areas were between 50,000 down to about 43, and that 43, which coincided with this fib level here, got violated on the 19th of May and then hit this key fib mark of 33. And I've been asked why I use this way versus the automated ones that they come on here. Well, this one works. Those ones are inaccurate mathematical calculations. And thus within such, and you can see how well it's just worked so well in the past. It'd be no, unless they could fix it well, no reason for me to do so. And as it goes, as I see this, we had an original test on here, and even for a few days consolidating near the level, piercing below on May the 23rd. And now we have this little few day rally and a decent day on the 25th, which was up 11.9%, 12ish or so, with a small amount of follow through, pretty much getting the 18 average of closes not shown. And now we can see showing weakness amongst the 18 average of lows, breaking down from here. We're in that point. So I see, if I see this thing breaking down below like 33, in the 32,000 change area, it's going to look to me as if it's a target statement that, okay, we're heading down, however long it's going to take, a concise move to 22,000, usually piercing extra, which would coincide with the previous all-time high that was occurred in late 2017 of pretty much 20,000. So that would be interesting on that point. And then when you look at just like key highs, key lows, you have a key low here back in like the start of the previous decade, early previous decade. And then whatever, this was like within the trend list. I'm not going to count the move in here, this high or this low, but this high, this low, then you have this low in here. Then we have this high here, low here, high here. So the last low is about 3,000 and change. So the likelihood that this makes a higher low is damn good, because this thing could even fall down to 10,000, 12,000, 14,000, and that would make a lot of people sick if it happens. And it's in the realm of ballpark that it could happen. You could say, oh, key low here, then the key low comes up at this point. Who knows? Maybe this is the lows and it's going to rally from here. But if you want to see, I need to see action above the 18 average of highs for me to say that this thing is at least in a get going stage. So it's got a long ways to go amongst the weekly term time frame. Major declining on the daily, long ways to go. Now amongst the monthly term, it is still in a bull market. 18 average of lows coinciding within the $20,000 key fib level, a previous high as well. And that's where it stands. Markets are going to have their up and their down moves. Is this a top? It could be, but I don't think it is. Of course, time will tell. It's normal within bull markets to, of course, have a lot of these correctionary moves. Just a short-term quick look at it. You can just even see just one little key thing here of note. This is from this last rally that we talked about that from that point. You established some support between 36.4 up and up to 37.3. And then when it tested here at this little ballpark here, wasn't able to hold it and then establish level of support. But the big thing I noticed is this failed breakout attempt at the 1 hour stamp on May the 29th. As it gets up above the 18 average of highs after showing decent strength amongst the highs, pulled back to the lows, higher low pullback, and then to break that so fast, this is a statement. Okay, looks like we'll at least test this area and go up to 37, this area here, which of course it never did. But whenever a good setup comes into play and it fails, you can expect something like this. And this wasn't that big of a move, but it was a concise move that clearly took out this low to the degree that for the last 4 or 5 periods, we're resisting this previous level of support. And it's still just barely supporting above this key fib level. If it keeps doing what it's doing, it's going to do it at it, then below it, and so on and so forth. And when I look at it from this perspective here, if I see this thing breaking down below pretty much this little previous support here, yeah, we're looking at probably going down another 10K as a possibility. Okay, let's switch this over to some precious metals. First gold, then silver. So going back before I was born, which is in here, price for gold, 30 some odd dollars an ounce. Shoots up to 185 or so, back down about a little over 100, up to about 850. Pulls back to 250 and up here to like almost 2. And what a run it was from the start of the new millennium. Having a pullback, and like you have a move like this, oh, what's the chance it has a higher low above 250? Yeah, of course. And the higher low was put in at around 1,080. It's managed to retrace over 100% of its losses because the high was 1,920. And it's gotten above that. Right now, it's only down 1% from its previous all-time high. The movement is amazing move. So now it's correcting this move. So key situation here is to make a higher low in here. The deepest you want to come back, you don't even want to do it this as far as the bull levels, come back here. You got this little bit of area here. We've already had this come back to this level. It's managed to have several periods to go down. But what it's done since is had a beautiful week that has managed to, or month rather so far, and May, the month's almost over, of 7.5%, which has managed to get the price barely above the 18 average of highs. Of course, we got this resistance established even further. We can see in here amongst the weekly that what action have we had below, above the 18 and such? Well, it's been a major bull market, of course. So since the 2018 lows, after it had a concise action last below the 18, you consolidate, neutralize the situation, and then establish a bull market run. I mean, when you're in a bear play, you could easily have short periods of runs in the opposite direction. This could be the case in here, of course, but we'll get to that when we get to the current time frame. Higher low successful. Higher high, higher low, the definition of trend. Higher high, matching low. Okay, concerned possibilities, maybe, but important not to resist here, does it? No. And then higher high was a slave. Okay, yeah, we're going to make a higher high for sure. Shank strength at the 18 highs, big move. Higher high. So low, low, low. Even a little bit here, but the last major key one, because of the good, decent selling, would have been that one. And the movements below it from the 2018 levels have been just, not much. But now we've had a little bit. Because we first supported the lows in September of last year, broke down below it in November. And since it broke down in here, and even really for that matter, since here, the only time it ever had any action above the highs was this little failed breakout here. And it had a little bit of an opposite direction move. Enough to make this again a lower low. So now do we resist? This is a key area on the bear level for resistance, was this little range in here. And we can see right now that, I mean, it can still resist it at it. It's at the most upper point, and it's a little extended on that upper point. But it's been nice to see how we've had the price action, at least on a bullish level for gold anyway, be able to make a move like this. It's now attempting the run. Key level for this time frame. Higher or low this. 61.8% is like the must hold from whatever. Well, this low, whatever the low happens to be, we know what that, at least I can tell you what that is. 1677. And this low here, yep, 1677 is the low. To whatever the high happens to be, which is currently 1913. So right now, so basically right now it's holding this general area here. If it goes up to here, then you want to hold maybe a little bit higher, so on and so forth. Getting up to this point, this is always interesting when it happens, when you have a big move, a very significant correction, and a significant higher low. And then most likely a significant move to previous high. What do you do? Well, what's going to happen next? Question mark. And it's, for me, it's like, I don't know, because I realize I can correct in so many ways. Maybe we 61.8 it, basically have a good price correction down. Maybe we grind this level for a bit, or maybe we just don't find little to no resistance at all, and then huge moves can follow. And let's switch this up to Fibonacci Silver. Well, Silver with Fibonacci. That is just an interesting setup, I must say. Let's start off within the weekly term. I got this line at 20, a key fib point. No resistance at this level here amongst the weekly. And most certainly a concise move at the next key level where there was certainly resistance. Piercing extra, of course. And you can even notice in here that on the August 3rd stamp, it pierces extra, closes near the 20 or 28, we'll call it fib line. And then the next period, we a correction down to 23.40. And then it instantly pretty much comes right back. So another test of previous high, piercing extra again, not by much, but a high of 28.90. 28.58 is the fib level. And then we don't even come back to 20. It supports well within the 18 lows. And you can, even this here, this is an interesting November 23rd stamp. Because you hit this low, you have a move up, back down, move up, and yeah, you can see that it's barely breaking, and at this low, it's just going down below this. It looks bad. But no, and it hasn't been a fantastically bull run, but it's been somewhat of one, I guess you could say. Comes back up, pierces extra in February, successfully correcting it now. This volatility is just interesting. And breaking above on this May 3rd week, and then these 3 weeks, it's how it's showing, just hanging in there above the highs like it is. And doing so, just like in the, it's like a big squish. If you squish it, it's like so tight, or if you will, I don't know how I'm putting it, but it looks just fantastic. We look at this on the monthly. I think that we're going to have a fantastic month in June. That's going to pierce extra 35.34. So if you want to try to make that options bet, all bets trades, your own risk on your own reward. Now, of course, wouldn't be doing it. But I think the mathematics to it could be quite interesting. Especially if you maybe go 5, 6, 7 weeks out, maybe, just to try to be a bit safer, and then you try to target like a $36 price. Like what would SLV or how you do it be if it reaches 36 and whatnot? Man, to me, that's what it looks like is going to be the case. And then I know a lot of people's favorite pattern is this cup and handle formation. Kilo. And the way that works is just so simple. You have a great up move. Kilo, key high. And then you have a very noticeable, really time and price correction. And that most certainly is the case here. And for a bear move, a move to be solid, it needs to, at least on a down one, it needs to hold and stay below the 61.8, which would have been approximately near like 16, 17 bucks. And obviously it had its chance in here, it didn't do it. So this selling has been a failed move from this point because it reached back to previous high like such. And then, as I mentioned before, what do we do? Do we have like what do we do? Can we just, do we find resistance here? Maybe not. Maybe little to none. Maybe we congest at that area for a bit. Neither of those two happen. Maybe it comes down and has a higher low and maybe get like a 38.2 or a 61.8 correction. And to me, that's a 30. That looks like a 38% correction. To me, on the way down from this low. And therefore, to do it, key low, key high, has to be a higher low, matching high, and then another higher low to create the handle. So generally, when you see it starting to rise from it to create that pattern, it gives you the great mathematical odds that two things are probably going to happen. The first thing is we're probably going to retest previous high. That's 50 bucks. And the next one is we're probably going to break it and have a significant move. Next key level above that, 130. At least for me it is. Let's take a look at this again on some, again, weekly time frame. I'm just thinking that this is a fantastic, fantastic look. It's just grindingly holding in there very nice since the middle of April, or for the last month and a half. Has just been doing just really well. And the 1 hour, kind of boring for the most part because it's short term. Had a chance to rally back up in here, but what did it do? Did it continue further? No. Did it come back to where we came from for support? No. Did it come back to its previous level and continue its support big time? So it ended the week getting above this and a decent setup moving forward. Like, okay, maybe we can retest the two resistance points. Next is 28 low change, and then of course the key fib at 28 and 3/5 or so. And we're in a very, very interesting time. I know we got people whom are going to be wanting and are right now getting out of fiat currency, and for very good reason. Myself being one of them. What do you put it into? And I just showed gold and silver. I think they're the obvious big two, but cryptocurrencies, of course, have been a big, big game play, and it's going to be interesting debates about what's better, something that's real or not real, because you got like the NFT, non-fungible. So would you rather have toilet paper you could really use, or would you rather have toilet papers on your cell phone, like an app that shows your toilet paper? I hate to be biased and everything. I like the hard assets idea. I look at things like NFT sports cards and things, and really not really something I would be interested in. But I know, of course, other people are. Definitely for things like gold and silver. To me, I look at silver like it's and I know it is, of course, it's a raw material hard asset that could physically be used for real things. Where if I put like a picture of a silver coin that might have like, oh, it's numbered 1 out of 100, or numbered 2 out of 100. Okay, whatever. But it's been nice, of course, with Bitcoin prices going much higher as it was when it was trading in the 50,000 range. Because my last few orders were, well, as the price was going up, February, March 14th, March 25th, April 10th, April 14th, May 11th. During, of course, the price when Bitcoin was higher. And now I can just that's the whole point of within the air, just making sure that you have, it's probably an extremely smart idea, owning precious metals, but there's a lot of different hard assets you could own. Crude oil, I do not think would be one of them. And then I gave the toilet paper example, especially that's like a really interesting one during these times. Yes, definitely an asset people are going to need, and something that might be extremely easy to trade at different times because, well, I'm thinking of two different reasons why. Reason number one, we'll go rewind a year ago, where the whole panic came in, and there probably needs to be panic reasons again for it to happen, where it becomes hard to get at stores and prices go up a bit, and then you can just sell it a little bit. And I think if you do it in the right way, which means you can get a small good profit on it, I don't think there's much wrong with it. I mean, people are selling it for like 10, 20, 40 times more than it's worth. It's like, in a free market where people are all seeing that should never even occur anyway, because, oh, you're selling something for like say it's something going for $1 right now, and I'm going to sell for 400 or 300. Well, other people are like, well, I'll go 100, I'll go 50, I'll go 20, and then the force of free market would then, of course, play out, and that's what I love about free market price discovery. But what items are good hard assets? That's something I'm curious to hearing in the comments section. I myself got into hockey cards, and I like them in two different ways. One, an unopened packs, which is exactly what this is. If you have just a bunch of cards open, I mean, maybe if you got the right card, maybe. I mean, it's like a lottery ticket when you open these up, which is why I don't want to do it. You might get Connor McDavid rookie here. Maybe. You might get a Austin Matthews rookie in here. But you know what? It's just another way. Another one is graded cards. I'm considering getting into that. I don't have any. Actually, I got some low-end, low-graded company cards. I don't really count. And I'm also getting into some decent autographs that I've been able to get, I think, at decent, okay prices, as different ways of collecting that hold it over 10, 20, 30 years, I think will continue to have value, where if I just put that fiat currency in like a safe, no thank you. I've also gotten a few dozen comic books. Again, a lot of different collectible items. And then how many useful items are going to be good to have? Maybe you have machinery for like cooking supplies, like just miscellaneous things people would need during these times, like propane this or whatever. I'm a big fan of propane accessories. Well, no, not really, but I just know that they're good to have for this time, and there's just so many other ones out there. Thank you for tuning in. Have yourself a great day. Bye bye.